Hello and thank you for joining us on Capital Market. I am Bisi Adebayo. It was a broadly bullish performance on the local burst this week with mild gains recorded in 3 sessions. The all-share index, however, remained well above the 34,000 psychological mark, closing at 34,885.5. Now, activity levels were weak as volume and value traded plunged by 84.1% and 28.1% respectively. Talking about performance across the sectors now, it was broadly positive, say for the banking and consumer goods indices, with the industrial, oil and gas and insurance indices closing in the green. But let's talk more about the market's performance this week with an investment associate at Alpha Morgan Capital, Emmanuel Adeleke. Good evening, Emmanuel. Thank you for joining us on the program tonight. Now, before we delve into the markets, first, let me ask, what's your view about the recent monetary policy meeting held earlier in the week? What do you actually make of the MPC's decision to hold monetary policy parameters?
The decision of the MPC to link rates unchanged just reflects the need for the CBN to balance between supporting economic growth as well as the rising inflation. But the truth of the matter is that there's quite a little in which the benchmark rates can do in terms of supporting economic growth. Over the past few months, I've seen CBN come up with several unorthodox policies as well as developmental financial policies, which has actually helped in supporting growth. One of which is the loan funding requirements. That has actually helped improve credit to the private sector. Also for inflation, CBN also now realized the fact that the rising inflation in Nigeria is not caused by the high liquidity that we're seeing in the system. It's actually caused by structural issues we're having in the system. When I mean structural issues, I'm referring to issues such as the border closure, the impact of the lockdown, logistic, transportation. So those are the structural issues that has actually been affecting the price increase. So we need policies. We need policies that would actually be able to address such structural issues. So for me, I think while the CBN or the MPC actually left the rates for change, I believe they will still continue to follow up on the unorthodox policies as well as developmental financial policies in which they've been implementing over the past few months.
Now, would you say that the decision by the MPC contributed to the positive performance that we saw at the equities market during the week?
Well, to an extent. When I mean to an extent, I mean when you listen to the speech of the central bank governor, it was mostly a dovish stance. So that's actually positive for the equity market. I mean, lower rates are positive for companies because by the time they want to borrow from the capital markets, they borrow at a lower rate, and so that helps their profitability. But to an extent, I mean, I think it actually supported the performance that we saw in the equity market. But what I believe was actually the major contributor was the fact that we have very much liquidity in the system, and the rates at the fixed income market have been low. So I think that was actually a more contributor to the performance that we saw in the equity market over the past week.
So how long are we likely to see that kind of performance at the market?
Well, I think we'll continue to see that good performance, I would say, over the rest of the year. And when I mean over the rest of the year, I think over the next few weeks, most investors will start positioning for fundamental stocks that have very strong dividends ahead of the full year 2020 earnings release. So I think over the next few weeks, I'll still see such bullish performance. Then most likely by the first quarter of next year, I'll most likely start to see some correction due to the fact that most of the stocks are quite overvalued already.
Now, let's talk about the role of domestic investors now. What role have they played so far in the markets?
Well, domestic investors have played quite a very good role in the domestic equity markets. Before now, I think over last year or so, when you check the participation of domestic, local as well as foreign. As a last year, the foreign investors tend to take a larger portion of transactions that happen at the market. But when you look at the participation year to date, you discover that domestic investors have actually been the larger participants in the equity market. Data from the NSE shows that domestic investors actually contributed over almost 70% or so, versus 8% to the equity market year to date, while foreign investors have contributed about 32%. The latest data that we have is that September, and think when I checked it, it was about 70% or so in terms of domestic investor participation in the equity market. So the domestic investors have actually been the major participants in the market. Over the past few months, most of these foreign investors have actually been on the watch line. They've actually been looking at what's going to happen in terms of economic uncertainty as well as FX issues. However, we've seen domestic investors take up. The domestic investors have come into play. They've been the one actually taking up a very large portion of our transactions that are happening in the equity markets.
Now, what can you say about the participation of retail investors? Because as it stands, it looks like participation has been more of institutional investors.
Yeah, you're right. So it's not just a situation that's just happened or that doesn't happen. That's what's been over time. When you look at the trend in terms of institutional as well as retail domestic investors, most of the time we tend to see institutional investors take larger portion in terms of domestic participation. But when you look at also look at the trend in terms of retail investors, it's not been bad. It's not been bad. They've actually been contributing quite a large portion into the equity markets. When you look at data as at when you look at data as at September or so, the domestic investors actually contributed about they contributed about 38%, while the institutional contributed about 62% in terms of domestic participation. So what we've also been seeing that's increased trend in terms of retail contributor. Although due to the fact that these institutional funds are continuing to still be a very larger portion of the market, so that would always the retail participation will continue to lag institutional funds. But in summary, when you look at it, the retail investors have not been doing bad. But there's still scope for improvement in terms of our retail participation in the markets.
Now, let's shift our focus away from the equity space now. What is your view about the crash in Nigeria's debt market rates?
The reason why we continue to see this low yields, the fixed income markets, the fact that we're still seeing that very high liquidity in the system. So if we can recall, sometime last year, the federal government and CBN rather excluded non-bank financial institutions from participating in OMO auctions. So what that resulted into more funds in the system, and this is the fact that we have small how do I put this now? Small alternative instruments aside the usual fixed income equities. So that led to a surge in liquidity in the system, and that led to that because of that led to a pressure on fixed income rates. And also over the past few months, what you tend to see is that this liquidity or this supply of funds in the market, it continues to exceed the amount by which the federal government has been borrowing from the markets. So it's just a very simple logic. When supply of money in the system continues to outweigh issuances of federal government bonds or T-bills, we tend to see a pressure on fixed income rates. So all in all, the fact is that we've been seeing that very high liquidity in the system, and that has been suppressing yields in the fixed income markets.
Now, let me ask you this. What do you make of the Minister of Finance hint that the federal government may tap into the Eurobond market next year, depending on the interest rates available, and that's despite tapping into the domestic markets to raise funds?
That's actually a good one, because I personally didn't even expect the federal government to tap into the Eurobond market anytime soon. But I mean, it's actually a good one. Over the past few months, the federal government has been relying on multilateral financing from the likes of World Bank, AFDB, as well as IMF. So, but them now coming to mention that they want to tap into the Eurobond market, well, I think is a welcome development, because that would actually be a very positive one in terms of our external position. Although one can argue the fact that we have quite a number of we have quite a large liquidity in the system, and the federal government can easily tap into the local market to access these funds. But I mean, when you look at it again, how it means federal government again is crowding out the private sector from the system. That means that the federal government is crowding out and private sector from the system, and also secondly, that would also be a very positive one for our external position. So I mean, once we see the actual implementation of this, I mean, and the federal government raising an Eurobond, I mean, it's going to be a very positive one for Nigeria.
But how receptive do you actually think investors would be to a sovereign offer from Nigeria next year?
Yes. That's a very good question, because what most people will be thinking now is that most investors are being quite cautious in terms of our emerging market assets, especially due to the fact that we saw Zambia defaulted on one of its payments some months back. But I mean, I don't think this would actually deter foreign investors from investing in Eurobonds, the likes of Nigeria, South Africa, Ghana, and even Ivory Coast. So I mean, I strongly believe that subscription for Eurobond would be very strong, and that's due to the fact that when you look at Nigeria's external position, I mean, they have to over the next month. There's definitely going to be we've actually been getting news of vaccines, and most likely by Q1 next year, most of these vaccines will be distributed. And when that starts being distributed, that would actually reduce the case of coronavirus that we're seeing, and that would help improve demand for crude oil, and in turn that would actually improve oil price. So with oil price expected to go higher next year, I mean, that's going to be a very positive one in terms of that's going to be a very positive one for Nigeria. That would actually aid the reception of foreign investors as Nigeria's Eurobond. So all in all, I believe there's going to be a strong subscription for Nigeria's Eurobond when Nigeria decides to tap into the Eurobond markets.
But what are your expectations around interest rates for such offering from the federal government? Because in the past now, analysts have raised concerns about the high rates offered in Eurobonds by the government.
Yes, I think what happened there is that foreign investors would likely pricing emerging markets risks to these Eurobonds. Already, when you look at what current FGN Eurobonds are trading at now, the 10-year Eurobond is currently trading at about 6%, while the 20 years are trading at almost 7%. So I mean, should Nigeria decide to issue Eurobonds? Should Nigeria decide to issue Eurobonds? We should
All right, we'll reconnect with Emmanuel Adeleke in just a moment to continue the conversation centering around the trading week. But please stay with us. We'll be back in just a moment. Welcome back to the program. Investments Associate at Alpha Morgan Capital, Emmanuel Adeleke, is still with us to continue the conversation. Now, Emmanuel, just before we took that moment, now we're talking about the proposed FGN bond in 2021. That's a proposed consideration by the government to return to the bond market. But then, do you think that bond offer will in any way ameliorate Nigeria's current condition at the foreign exchange market?
So I think we should start. Let's look at the foreign exchange reserve. Yes, well, yes, for the foreign exchange reserves, definitely that was going to be a very positive one in terms of accretion to the foreign exchange reserves. We don't know the size of the possible Eurobond issuance the government will be doing, but I mean, whatever amount they're going to be doing, definitely is going to be in excess of $1 billion. So that would actually support the foreign exchange reserves, and that would also give more support to the CBN in terms of supplying FX to the market. So you might not actually see a very big acquisition in the naira this year, but I mean that's going to be the inflow of the Eurobond emission definitely going to support the naira at the exchange at the various windows.
Bond flotation be successful now? Will Nigeria have to readjust the naira?
Okay, so in terms of readjustment of the naira, I actually don't think we might see a readjustment of the naira. So when I mean a readjustment of the naira, I don't think we might see we might see depreciation in the naira. On the other hand, I think we might actually even see a slight appreciation in the naira. Should we see these Eurobond emissions come into should we see this Eurobond emissions come into play? Because that would actually support FX reserves, and with oil price expected to also go higher by next year, I mean that would also support inflows. I mean FX inflows to the central bank, and that would actually mean that the central bank would have more ammunition to be able to manage FX liquidity in the system. So there is actually a likelihood or possibility for us to see a slight appreciation in the naira next year.
Well, let's dwell more on the naira now. Tell us what's happening at the FX markets with the naira currently trading at a record low at the I&E window.
So at the high window, the naira is currently trading at almost about 390 naira to the US dollar. And I'll say what's been driving that is the fact that aside the fact that we have speculations has been a major contributor to this, we also have the fact also remains that when you look at the sales the CBN has been making at the I&E window, the sales hasn't been that much compared to the demand that we've been seeing. Already we even have some backlogs of FX demands at the window. That's aside current demands at the window. So when you compare the supply in terms of FX to the window compared to the demand, there is actually a lag. So I believe that's what's actually been driving the rates at that window. But on the parallel market rates, I think most time when we tend to move towards the first period, we tend to see wider speculations at the black market or the parallel market. So I believe aside the fact that we've been seeing we've not been seeing that much FX liquidity in the system, and there's also the fact remains that we also seen very large speculation, particularly at the parallel markets.
Now, what is your outlook for both the equity and the fixed income markets in the coming weeks?
In the coming weeks for the equity market, expect to see this bullish trend, although the bullish trend might not be as what we've seen over the past few weeks. As I mentioned earlier before, first of all, we have quite a very significant amount of maturity that will be coming in over the coming months. When you look at data from FMDQ, FMDQ puts OMO maturity to be almost about 1.8 trillion naira. That's OMO instruments that's going to mature in December. I mean that's a very large one. And given the fact that our rates are low in the fixed income markets, investors seeking higher returns will definitely go into the equity market to seek better returns. Also, ahead of the full year 2020 earnings release, I expect most investors to start taking position in fundamental stocks that have very high dividends. When you look at stocks in the equity markets, some stocks like the likes of Zenith Bank, UBA, even GT. When you look at the dividend yields, most of these stocks are still offering dividend yields in excess of over 10%. So let's even assume markets. Let's even assume markets even decline. When you compare this dividend yield that investors will receive, I think that's that's a very strong justification for some investors to actually start taking position in the equity market. So for the equity market, I still expect to see some bullish run over the coming weeks, but it might not be as what we've seen over the past few weeks. Then for the fixed income market, again, as I mentioned, we're expecting about 1.8 trillion naira worth of maturity from automobiles. While in terms of T-bills, we're expecting about 130 billion naira in terms of T-bills. Price fine now, the CBN might or the federal government might would most likely roll over the T-bills. But for the automobiles, when we take a clue at what the CBN has been doing over the past few months, when we take a clue at what they've been doing, we discover that they've actually been issuing about 30% of what's maturing. So we assume that same 30% in the coming months. I mean, that's the point of the fact that we'll definitely see very high maturity and high liquidity in the system in the coming months. So that's going to suppress needs at the fixed income market. So particularly at the bonds, at the federal government bonds, I still expect to see a decline in the federal government bond yields in the coming weeks. But for the T-bills, I expect slight movement. I expect slight movement or little activity at the treasury-based markets.
We'd like to thank you, Investment Associate at Alpha Morgan Capital, Emmanuel Adeleke. Thank you for sharing some of your time with us this evening. Now let's take some company news, starting with PZ Cussons Nigeria Group's announcement of the retirement of Mr. Kola Jamodu as the chairman and non-executive director of the company's board. In a statement sent to the Nigerian Stock Exchange, Jamodu's retirement, which takes effect on December the 11th, 2020, will enable him to pursue other personal endeavors. Mr. Kola Jamodu joined PZ Cussons in 1974 and served in executive positions for 24 years to later become the company's chief executive officer of the Personal and Consumer Goods Manufacturing Company until his retirement from that position in 1999. Meanwhile, the board of Unilever Nigeria PLC has appointed Mr. James Aguilera as a non-executive director of the Consumer and Personal Care Products Company. In a statement sent to the Nigerian Stock Exchange, the company's board announced that his appointment will take full effect from January the 1st, 2021. Aguilera, who joined Unilever Spain in 2009 as its executive vice president and chairman, was appointed as executive vice president Unilever Eastern Europe in September 2016 and later became the company's executive vice president for Africa. Before joining Unilever, Mr. Aguilera has worked with Nestle, Coca-Cola, as well as Procter & Gamble, with experience that spans across Europe, the Americas, and Asia. And finally, Stanbic IBTC Holdings says it has established its own wholly owned insurance company after its license were granted regulatory approval by the National Insurance Commission. In a statement sent to the Nigerian Stock Exchange, the Thai Bank Group explained that new subsidiary will be referred to as Stanbic IBTC Insurance Limited. Stanbic IBTC Holdings also mentions that the establishment of the insurance company complements a variety of products from the parent company as it seeks to become the preferred solutions provider in the life insurance business within the country. Recently, the National Insurance Commission issued licenses to 4 new insurance companies and 1 reinsurance firm to operate insurance business in Nigeria. And that's where we wrap up today's program. Thank you for watching. I am Bisi Adebayo.